In trading, you don't get paid for how much you know you get paid for, how much discipline you can hold when the market is trying to break you apart. Every successful trader eventually learns that the market isn't your enemy or your friend. It's a mirror. It reflects your own strengths, weaknesses, fears, and greed right back at you. The sooner you understand that, the sooner you stop trading the market and start trading yourself. I've seen traders blow entire fortunes because they couldn't follow 3 simple rules. They were smart, they were ambitious, but they couldn't master their own impulses. And let me tell you, the market punishes that kind of weakness without mercy. You can read 100 books, memorize every chart pattern, and study every indicator, but if you can't control your emotions, you'll lose everything faster than you think. The first rule that will save your account is simple to say, but hard to live by. Cut your losses quickly. Most traders know this rule. Almost none of them actually follow it. They'll watch a trade turn red and think, it'll come back. They'll move their stop loss lower just to give it more room. They'll justify it with logic, analysis, or a gut feeling, but really, it's pride talking, pride and hope, the 2 most expensive emotions in trading. I learned this lesson the hard way, more than once. I remember a particular trade, a corner in cotton that looked perfect. The setup was right, the timing was right, and the market seemed to confirm everything. But it started going against me, just a little at first. I told myself it was a pullback, then a little more. I told myself it was temporary. Before long, what was supposed to be a small drawdown turned into a brutal loss. Why? Because I couldn't admit I was wrong quickly enough. You must develop the ability to accept being wrong as a natural part of this business. You're not a fortune teller, you're a risk manager. The difference between a professional and an amateur is that the professional has no ego in the market. He trades probabilities, not pride. When the market shows you you're wrong, you act immediately, no hesitation, no debate, no excuses. Take the loss, preserve your capital, and move on. Here's the truth. Small losses are tuition. Big losses are bankruptcy. Every small, disciplined loss you take is payment for the privilege of staying in the game. And staying in the game is the only way to eventually win. Now, the second rule is equally important, but harder for many traders to truly understand. Never average down on a losing position. That's one of the most seductive traps in the entire market. It appeals to your logic. If I liked it at $50, I should love it at $40. But that's not logic. That's ego wearing a mask. When you average down, you're not trading anymore. You're praying. You're trying to prove the market wrong instead of aligning with it. I've watched great traders destroy themselves by averaging down. It feels so rational, buying at a discount, improving your average price, but in reality, you're compounding a mistake. You're turning a small wound into a fatal one. If the market is moving against your position, that's information. It's telling you something isn't right. The sooner you listen, the less damage you'll suffer. In my time, I saw men lose entire fortunes because they couldn't let go of a losing position. The ticker tape would flash red, and they'd double their size. They weren't trading, they were rebelling against reality. You can't do that in this business. The market doesn't reward stubbornness, it rewards humility and discipline. If you're wrong, get out. If you're right, stay in. It's as simple as that. You never add to a losing trade, only to a winning one. Because when a stock moves in your favor, it's confirming your judgment. That's when you have the wind at your back. That's when it makes sense to scale up carefully, with stops to protect your gains. The problem is, most traders do the opposite. They add to losers out of hope and cut winners out of fear. They let emotions dictate decisions. They'll say, I'll take a small profit now before it disappears, but they'll hold on to a loser until it wrecks them. It's completely backward. To succeed, you must invert that instinct. Cut losses fast, let profits grow. That one principle alone will transform your entire trading career. But here's something few talk about. These rules don't just protect your capital, they protect your mind. The biggest danger in trading isn't losing money, it's losing confidence and clarity. Every undisciplined trade chips away at your judgment. It fogs your decision-making, and when you're trading from a place of desperation or frustration, you make catastrophic errors. The market is a brutal teacher, but a fair one. It doesn't care about your past wins or your future dreams. It only responds to what you do right now, in this moment. When I traded, I used to write notes to myself on the wall. Be right, sit tight, but if wrong, get out. That was my daily reminder that survival always comes before success. Now, let's talk about the third rule, the one that separates the gamblers from the professionals. Always wait for clear confirmation before entering. Patience is a trader's greatest weapon, yet it's the one most refuse to use. Everyone wants action. They want to feel like they're doing something, making moves, staying busy. But activity is not the same as productivity. In the market, impatience is expensive. The best trades are obvious in hindsight because they were obvious in real time if you had the patience to wait for them. The market leaves clues. It whispers before it shouts. You'll see the signs: price tightening, volume increasing, structure shifting, and then, finally, the breakout. But most traders can't wait that long. They jump in early, guessing instead of observing, and end up caught in false moves. When I was young, I used to take every little fluctuation as a signal. I'd buy because a stock looked ready. But ready for what? The market wasn't confirming anything, it was just teasing me. I'd lose money over and over until I finally learned that the best trades take time to form. You can't force them. You must wait until the tape confirms your theory. Only then do you act. I remember sitting in the bucket shops, watching the quotes roll in on the ticker tape. The tape never lies, it tells the truth about supply and demand, fear and greed. But it only speaks clearly to those who are patient enough to listen. I'd wait for the tape to show a pattern I recognized: consistent higher highs, volume expansion, momentum building. That was my cue. Only then would I enter. And when I did, I'd do it with conviction. You must learn to wait for alignment. Your analysis, your timing, and the market's behavior must all point in the same direction. When they do, the trade feels effortless. When they don't, it feels forced, and forced trades almost always fail. The irony is that the hardest part of trading isn't making money, it's waiting for the right moment to make money. The great traders understand this. They might place only a handful of trades a year, but those trades define their entire fortune. Think of it this way. Your capital is ammunition. Every bullet you waste on random shots reduces your ability to strike when it truly matters. Don't shoot at every target that moves. Wait for the one that's standing still, clear in your sights. Trading discipline is like muscle memory. It takes repetition, pain, and time to develop. You won't become disciplined overnight. You'll violate your own rules. You'll hold losers too long, enter too early, and ignore your stops. But every time you do, remember what it costs you, not just in money, but in mental energy. If you truly learn from those mistakes, you'll evolve. The 3 rules: cut losses quickly, never average down, and wait for confirmation may sound simple, but they are the foundation of survival. They're not theories. They're battle-tested truths written in the blood of every trader who came before you. The market hasn't changed. The instruments are faster. The charts are digital. But human nature is identical. Fear, greed, impatience, and ego still drive the crowd. And the crowd still loses for the same reasons they always have. What separates you from them is how you manage yourself, because in trading, you are your own worst enemy. Every decision you make reflects your internal state, not the market's. The goal isn't to beat the market. It's to master your own reactions to it. You can follow every chart, read every report, and watch every tick, but if you don't understand yourself, none of it will save you. The market will always test you. It will tempt you to break your rules just once, and that one time is usually enough to undo months of progress. The danger isn't in not knowing what to do. It's in knowing what to do and still not doing it. That's what destroys traders. You might think discipline is restrictive, but it's actually freedom. When you have rules, you no longer trade on emotion. You trade on principle. You stop chasing every move because you already know what setups you'll take and which ones you'll ignore. Most traders lose money not because their strategy is bad, but because they abandon it at the first sign of discomfort. They want certainty, and when the market doesn't give it, they panic. I've seen markets that looked completely irrational, and yet With time, everything made sense. The tape always told the truth, but you had to let it. When I was sitting on big profits, the hardest thing wasn't entering the trade, it was sitting still. The human instinct is to do something, anything, but the real money is made in the waiting. People call it patience, but in trading, it's self-mastery. You wait not because you're lazy, but because you understand that timing is everything. The rule about waiting for confirmation goes deeper than price action. It's about alignment between your logic, your intuition, and the market itself. If you ever feel doubt, confusion, or hesitation, that's a sign to stay out. A good trade feels calm. It doesn't feel rushed. You might still lose, but the decision was sound. And when your decisions are sound, your results take care of themselves over time. Many traders think they're risk takers, but the truth is, the great ones are risk controllers. They know exactly how much they're willing to lose before they even enter a trade. They accept that amount completely. That acceptance frees them. They don't need the market to prove them right. They just need to manage themselves correctly. If they lose small. If they win, they let it ride. That's how fortunes are built slowly, methodically, through consistency. There's a saying I used to keep close. A man who can both be right and sit tight is rare. Most can be right but not sit tight. They take profits too early, cut their winners short, and wonder why their account never grows. The market rewards patience and punishes impatience. When a position is moving in your favor, your job is to do nothing. Let it work. Let the trend develop. That's where the compounding happens in time, not in constant activity. Now, here's something most traders never realize until it's too late. The greatest danger comes after a winning streak. When you've had several wins in a row, you start to feel invincible. You believe you've figured out the market. That's when you loosen your rules, take bigger risks, and forget that the same principles that made you money are the ones that protect it. I've been there. I've seen profits turn to dust because I let confidence turn into arrogance. The market doesn't punish you when you make mistakes. It punishes you when you repeat them. One mistake can be forgiven, the second one costs you dearly. That's why I always said, a trader must be a student of his own emotions. Keep records, not just of your trades, but of your state of mind when you made them. Were you calm? Were you impatient? Were you angry or bored? You'll begin to see patterns, and those patterns will teach you more about yourself than any chart ever could. When I look back, every major loss I took came from violating one of those 3 rules. Every big win I had came from respecting them. The difference wasn't in the setup or the stock, it was in my discipline. That's the part most traders ignore because it's not exciting. It's not glamorous. Discipline doesn't make headlines. But it's the one thing that separates those who survive from those who vanish. And let me tell you something else. The market doesn't care how long you've been around. It can humble a veteran as quickly as a beginner. You're only as good as your next decision. Every morning, when the market opens, everyone starts from zero. The slate is wiped clean. Your reputation, your experience, your last trade, none of it matters. All that counts is what you do right now. That's why humility is the trader's greatest armor. The moment you think you can't lose, you're finished. The market has a way of reminding you that you can. Confidence is useful. Arrogance is fatal. You must always respect the possibility that you're wrong. Not fear it, respect it. That respect keeps you sharp, alert, and flexible. It's what allows you to survive the unexpected. You see, survival is the real game. Everyone talks about profits, but very few talk about staying alive long enough to enjoy them. The first goal of a trader should never be to make money, it should be to stay in the game. Protect your capital like a soldier protects his ammunition. Without it, you can't fight another day. Once you're safe, then and only then do you aim for profits. Remember, markets are cyclical. There will be times when opportunities are everywhere, and times when there's nothing to do. During the dry periods, the best trade is no trade. Sitting on your hands is often the hardest trade of all, but it's also the smartest. The danger of boredom is that it pushes traders into taking poor setups just for the thrill of activity. That's how slow losses bleed an account dry, one small mistake at a time. A real trader is not addicted to trading. He's addicted to doing the right thing, no matter how hard it feels. Sometimes that means acting immediately to cut a loss. Sometimes it means doing absolutely nothing for days. Discipline has many faces, and you must learn to recognize all of them. These three rules, cutting losses fast, never averaging down, and waiting for confirmation, aren't suggestions. They're survival codes. They were written in blood long before modern charts or algorithms existed. They apply to every market, every era, every trader. You can ignore them, but the market won't ignore your ignorance. It will extract payment, and that payment will be your capital. So before you open another position, ask yourself, am I trading from discipline or emotion? Am I protecting my capital or chasing excitement? If you can answer honestly, you'll already be ahead of most traders out there. Let the crowd chase every move. Let them argue about news and predictions. You stay calm. You stay patient. You follow your rules. That's how you survive. That's how you thrive. The market will test you, break you, and tempt you, but if you hold firm to those three principles, it can never destroy you. Every loss, every mistake, every painful lesson eventually shapes you into something stronger. The market doesn't reward perfection. It rewards perseverance. You don't have to win every trade. You just have to avoid the ones that destroy you. Keep your losses small, let your winners run, and above all, protect your capital and your mind. Because in the end, the greatest victory in trading isn't the money you make, it's the mastery you gain over yourself.